Good evening. So this is the daily market analysis for October 22nd, tomorrow to Tuesday 2024. Let's get into the charts. Here we have the Nifty charts here. Yes, so all the gains, so the attempt to recovery for on the previous Friday didn't sustain. Looks like there was a dead cat bounce and market went bearish, forming a bull trap pattern, two-star pattern, and it almost looks like a dark cloud where more than 50% of pullback has happened from the high of the previous candle. So that's it. Bull trap to dark cloud. It's a bearish pattern, of course, and there is also a head and shoulder pattern. Neckline is already breached. So there is a attempt to recover from that neckline and then bounce up from there, but that didn't happen. Looks like it is breaching that head and shoulder pattern that you see there. And the target could go as low as 24,000 or few hundred points more further. It's a target for the height of the headline, 600 points or something. So Bollinger Bands is clearly showing bearish pattern, bearish indication because its expansion is not downside and it's bearish bias below the median of the Bollinger Band. Let's look at Banknifty. There is also a bull trap here, but it did not go on to make a dark cloud pattern. But definitely a wide range bearish candle is formed here. So it met with the resistance of the 20 exponential moving average, and then actually it met with the resistance at the median of the Bollinger Bands at 20 moving average and could not sustain to close above the 20 exponential moving average. That's what happened. Right. So the expansion is not seen much in Banknifty. So Banknifty may be consolidating. Still looks more stronger than Nifty. Because Nifty, the expansion is very clear in the Bollinger Bands. That's about the pattern. Now let's look at the levels. The resistance now would be the 25,000 and this is a rounding number, and also the 25,110. That's where the 20 exponential moving average resistance is coming into play. After that you have the 25,433 which is the previous resistance zone, and then 25,740 where the previous gap resistance is there. Close by you have the 25,850 which is the previous breakout zone. Then another gap comes in at much far above the 26,000. Before the 26,000 is there. That's the resistance on the upside downside. That's what we're more interested in. The market is negative bias. So the first support would be at this 24,570 levels. That's a previous swing low, right? And that does not hold. That previous swing low is not holding. Then it comes down to 24,477 where the 100 exponential moving average is there. You have a Fibonacci 38 and 100 exponential moving average confluence that's happening at the 24,400. That's going to be good support then. So once that also does not hold, then the next stop will be 24,000 big rounding number, and then the previous swing low is at 23,900 nearby zones, 894, 23,894. That's where the previous swing low support is. That's what it will look like, because hope it doesn't go to the 20 exponential moving average at 23,300. It may not go that far as of now. So correction, so far the highest correction that has happened now this time is 6.5% or something in Nifty. Nifty is 8.5%, and it was recovering. It was recovering from that 8.5%. Now looks like it's facing the heat of resistance, and then the resistance now would be on the upside, would be clearing that gap at 52,820. Once that is cleared, then 340, 360 has got that neckline of that pattern, cup and handle pattern, and any clearance of that neckline would mean that it can fly and make big time moves of 3,000 points or so, right? Because that's the handle of the cup and handle's height. Right, so yeah, so you have to clearly see more about this zone where the arrow is not, but we are more interested in the downside. The first major support could come in at this 51,762. That is where the 100 exponential moving average is. If that is not holding, then previous swing lows and the Fibonacci 50 confluence zone is at 50,194. Then comes 50,000, which is a big rounding number. Good support can come in there. That is also lows. Next stop is 49,345. That's with 200 exponential moving average, which if that could mean big trend corrections, right? So as I said, Banknifty looks much better. Let's try to see what is the momentum. What happened in the moment? Momentum has fallen to the bear zones back below RSI 40. right? So it's become more because Banknifty's momentum is still in the sideways. Just it has taken a bend. That's all. So that way, momentum-wise and price-wise, Banknifty looks much better. Trend remains to be the bear zones, but it has reduced the strength of that bearishness. Okay? This is using the ADX, AMI positive and negative that we're trying to understand the trend. So India wakes the volatility. Had spiked up to 5.6% further, heading towards that 14. It's 13.76. So that indicates there is some amount of tension, but still in the low altitude regime, you can say. Right. So we have seen the chance patterns, levels, momentum, volatility, trend. Now let's see how the different sectoral indices perform today. Sectoral indices, you see green only in the auto, which was beaten down, much more than the other sectors in the previous several weeks, and today it seems to be trying to bounce and trying to climb back sideways. Only the only sector that had fallen to the bear zones is the auto, so it's trying to retain that. So that's only one that has turned out weekly, 0.5%. That's all. Other sectors are all red. IT is red, 1.3%. 1.5% metal is down, pharma is 1% down, FMC is down, reality is 1.5% down. So all sectoral indices are down. Lower markets, the mid cap and small cap, also showing deep cut today. It's 1.5% each down, but it's still not very far from the all-time high. So that way, it still shows strength and does not fall to the bear zones and the RSI momentum also. It's still at that support RSI 40 zones, right? Mid cap and the small cap. But today, red day, mid cap and mid cap, both of the mid cap and the small cap, both of them sees 1.5% of cut, and seems to be weak, but seems to be slightly concerned that way. So that's about the different sectoral analysis. Now heavy weights, if you see, HDFC Bank is the biggest contributor, right? Let's look at this. This is the market capital. So what performed today was HDFC Bank, Mahindra, Bajaj Auto, and Asian Paints. First is all dark. HDFC made big 3% nearby moves, while M&M made 1.5% and Auto made 4% more. Bajaj Auto. So heavy weights, if you see, it's HDFC Bank and Reliance also showed some green, but also it's all down, and Kotak Bank got much more hit with 4.37% of big cut. That is also is falling down. So heavyweight stocks, we are seeing trouble in the ITC, which has fallen to the bear zones on the short term. Kotak Bank, which is also heading towards that, but not yet fallen. TC is already there in the bear zones. If we hanging on, rest is all hanging on. So it's the ITC, the only sector that has fallen to the medium term, fallen to the short term bearish momentum zones. Others are all hanging on the sideways still. But lovely greens are HDFC and the line. So HDFC is the one that held the market up there. I don't know if FI data has come in, we'll just check. So looking at the FI data, today is 21st, and we have another 2,260 crores of selling for the FIs, while 3,200 mutual fund or the FI domestic institutional purchases happened, which balanced the market from crashing. So FIs has been selling 80,000 crores plus, right, just in 2 weeks or more, few days more. That's the kind of selling that we're facing. That's a worry. But mutual fund money and domestic DI money is flowing. That's holding the market, as I said before, right? That's the story. Now, world markets, if you see, it's all-time high levels is where the Dow Jones and Nasdaq and S&P 500 is. That's all at the very, very top, showing green. That's a positive thing. But you have a rupee that is weakening day by day. It's 84.07 today, close up. Crude oil this has had cooled down, but today you see a 2% up move. Gold is at all-time high. That is the biggest worry. Gold is at record highs. Equity markets will have to worry because people are shifting money to the safer haven. So that's an action. So overall, just to sum it up, my view remains bearish because market can go to 24,000 at least. Retracement could continue given the price patterns, momentum, trend, volatility. All of this. Global views, there is tension on the war still there, but the US market is doing good. Oil market is also fine. Gold is spiking, that is caution. So otherwise global views are okay. Alright, and but earnings had its impact in the market, and bearish patterns on momentum and based on that, it seems like it could go and make for more corrections up to 10%. That may be an investment opportunity for investment, but for traders, you have to be cautious because strong DI support is there, so reversals can happen quick. But overall, market view is bearish for tomorrow, right? Play it safe. Thanks for watching. Happy trading, happy learning. Bye bye.